guys, just going to run through all the ETFs on the New Zealand stock market, or share market as we say, and show you what I saw from the bounce from the virus. I saw them all pretty much returning to previous levels, and I marked out the percentage return on your investment one may expect to get. So the global aggregate bond here is only a little 5%er, but as you can see, it's returned to previous level from passing the trigger line, and it should continue on its sort of original trajectory, albeit a little bit volatile if you ask me. Next one, Asia Pacific, same sort of thing. Trajectory was up prior to the crash. This is the crash around about 20th of January, and everything's heading back up. We move this arrow to the middle of the trajectory, extend it forward. That should be the path. It will continue on, and that's where it should go. So just from there, there's about not much, 10%er, 10% growth rate there. Return on your money, apart from it should still just keep chugging away. Volatility, not too bad. That's Asia Pacific. Not too keen on Asia Pacific shares myself. Whether that includes Australia and New Zealand, I'm not sure, but there's a lot better ETFs to look at, I think. So trajectory prior to the crash is a little bit down and a little bit sideways. So you might want to put a trend line across the tops of these, and should it reach that target there, you may want to think about selling. That'll be your first target. If it's looking like it's going to continue, that would be your second target. Alright, so there's still about 14% there and maybe 17%. I don't see it coming down myself, and I don't see it staying at that level forever. So which way will it go? Most probably up. Alright, that's what I would say. What else we got going on? Australian financials, previous to crash, a little bit downwards and sideways, and there's your trend line. So should it reach here, there is a 24% gain, would be a good place to maybe sell, set a buy stop above it if it breaks above and continues on its merry way. What we have here is a bit of a triangle. Now from the breakout, what you can do is just measure the width of this triangle here and project it. Should it break out above this triangle, above, that would be your target. Alright, $9. What else you could do is get your Fibonacci's. Fibonacci's up here, fib retracement, bring it down to the low, and it'll give you some extended targets. And we got the 161 target is there, so you'd be looking at this zone as another potential sell when you get there. Sell, set a buy stop above it, get some money in your pocket, unless you just want to hang in. But it's good to sell, get some money in the pocket. And with a company called Shareies, you can buy and sell, from what I believe. I still have to open an account myself. I'm with CMC Markets. Costs you nothing, $1.50 a month. You can't complain about that. So what else we got? I won't go into more quite as deeply as that. Just trying to give people the overall idea of potential growth and potential money to be made. A lot easier to try and make money on ETFs than to try and make money on companies. Companies have got too many moving parts as far as trying to make a decision. Alright, that's where I would estimate it would go, and that is, can't see, about 38% on your money away, in my opinion. So I'll just flick through. That one's nearly there already. That was Australian Resources. That should keep growing because companies are going to start using more and more resources, natural resources, minerals, copper, etc. We can see automation and robotics has already returned to previous level. That was a, oh, it's already in there, buried now, 16% move, and trajectory looking pretty good. So you can see what happens here. Sellers came into the market on Friday. This is Sunday I'm recording this, and a bit of a sell-off. As soon as we reach support and resistance levels, just make that a bit thicker, people know that other people potentially may sell, so everybody starts to sell. Whether that lasts or carries on Monday, different story, you got to watch it. But the best bet, I wouldn't say it's the best bet, depending on your level of risk tolerance, you might want to buy when it gets to this level here. Buy on the dip, and it's going to bounce off maybe this moving average line and then continue. Or you put a buy stop, or you make an alert, which you can do on invest.com, or if you've got Tradeview. Mine don't work on here, so don't know why. Still haven't got to the bottom of it, but you might want to put an alert here and then a buy stop above it, because you know it's broken above resistance and it's probably going to continue on from then on. Alright, that would be my guess. Dividend, I'll just keep flicking through them now just to give you a quick picture, and I'm going to put a link to this list in the description. That's a Dropbox link, so it should be safe and secure. So I don't think you'll get all the arrows and things, but you might want to just try and copy a few of the ones you think that might work out best. Some of these trajectories were quite good prior to the crash. And as Warren Buffett says, great businesses that are temporarily under pressure. So the only reason these indexes have fallen is because of the crash. So health and innovation, hot little sector. So you can see that one's raced up, 10%, 15% growth there, and probably going to continue back up, in my opinion. Alright, who's this? What I've done here is I just take a similar pattern that I see. Might take a bit too long to try and figure out. I just keep looking until I sort of see there's a dip here, bit of a spike, and then I just look for a spike and a bit of a dip. So let's say it's there, and then I'll just project that forward there. Right? So it could do that and then go back up, or it could just continue straight ahead, but we still have a confluence, right? That it's going to still head back up towards that way. But that's how you do that. Sometimes it's quite uncanny how closely they will follow. Look at that angle, look at that trend. Mid-cap Australia, raging away. Still room to go. New Zealand property, probably on the move. Population still keeps growing. Hang on, what was that? Oh, New Zealand bonds. Can't say I know a lot about bonds themselves, but it was only a 1.2% move anyway. So you just stay away from that. If you don't know about it, stay away from it. Whatever that one was, cash, I think it was, bonds and cash. Looks like a nice, healthy bit of room to move still. Top 20 companies in the Australian share market. And I think you just get the picture of what's happening. This time, we're June, April, May, June, July, August, September. Where do you think these stocks here that we're looking at, these ETFs, will be in September, in 3 months' time? Economies are opening. The Fed has said they will do whatever it takes to support the market. They are pumping in trillions. Vaccines are getting closer and closer. People have become a little bit immune. That's how I see it. New Zealand hasn't had any real growth or infections. I think we had one today, it said, popped up on my desktop. I mean, I think probably more people have suffered more from the flu. And the last one, Smart Shares US large, which seems a little bit surprising if this is all the large value companies on the US stock market. It's a little bit stuttery, but it's still in an uptrend. Alright, see if we can get some. Well, let's say that was the triangle there. I tend to work mostly with triangle patterns and Elliott wave extensions. They're the easiest thing to do. So you'd put, that's where it started, target, target, I broke out here, that's your target. which is right up where the traffic is. Try and get it straight, a little bit fussy. And again, you get your Fibonacci. Oh, wrong one. Which one's the Fibonacci? That one there. Fibonacci from the top down to the bottom. These are now your targets. Okay, so these are always going to line up one way or another reasonably close. So we have another zone. Alright, that's what I would say in a nutshell. Potential growth 25% on your money. So we'll see how they all play out. We will revise a bit later on. So I hope that's helpful and useful. Don't forget to like and subscribe if you want. I'll be posting more things. Been working on a NZX scanner, but I won't even show it because I'll start delving into it. And don't forget, if you want, download this list. I've exported the list down here and I've uploaded it to Dropbox, and I'll put the link in the description as I said. Alright, I'll leave you with a little quote. Nothing fancy, but no guts, no glory. Alright, what you need to do is understand, implement and succeed. Okay, I'll see you later. Have a good evening.